Welcome back. New figures out today show that Europe's economy is shrinking, and it's not just Greece or Spain, but Germany, considered the strongest there, is also contracting.
And many say it's the news over there that's holding up stocks over here today. Joining us now is Dambisa Moyo. She's international economist, author, and CNBC contributor. And we do welcome you to the New York Stock Exchange.
Thank you very much. Thank you.
Thank you for being with us today. What's your sense of the impact? Is Europe reviving or not? And what impact is it having over here in the U.S., do you think?
So I think, firstly, the market slightly overreacted. I mean, this is sort of backward-looking information. I mean, we know what the ongoing structural problems have been in Europe, but, you know, significant policy changes and announcements over the past 6 months, 8 months have actually been quite supportive of Europe. And I think we're certainly not in the Brexit, China in a hard landing, Euro breakup scenario that we were sort of the middle of last year. So I'm actually pretty optimistic about where things are now. On a relative basis, of course, I think the U.S. story is much more constructive than the European story.
But I guess people were surprised that even Germany, which is considered really the strongest economy in Europe, is also showing contraction.
Yeah.
So is Germany, have you noticed that we're seeing a leg down in activity? I mean, obviously, they're all trading with one another, so Germany will get impacted.
Yeah, no, I mean, absolutely. But I think also, I was just looking at some of the IMF forecasts for January, and I think actually the story is improving. I mean, I think if you look at Germany's performance in December and January, I think the story is actually more of an acceleration story. And again, I really believe that the policymakers, the sounds coming from the policymakers are much more constructive, much more supportive. So if things get pretty bad, which they potentially could do, I still think they'll be there to backstop the situation. And I might add one other thing, which is that monetary policy in the Eurozone compared to UK, US, and even Japan is still very, very aggressive.
I was going to ask you about that. It would appear that Mario Draghi is in some ways being dragged kicking and screaming into this currency war with Japan, with the United States.
Yeah.
What do you make of that, and what impact does that have on the recoveries?
Well, I mean, I think basically I'm still quite disappointed that the European policymakers haven't been as aggressive as I think that they could be. So a lot of the announcements in the policy space, even basic things like cutting rates, I think there's still a lot of wiggle room around that area.
Well, on the one hand, he wasn't willing to cut rates a couple of weeks ago, but yet he was talking the euro down pretty clearly.
Absolutely, and also not only that, I mean, today there's been a lot of discussion from Mr. Constantio about the possibility of going to negative rates in the ECB following what has happened with Denmark. So I think there is a lot of scope there to see much looser policy in the monetary space.
What's your take on sort of the positives? We've talked a lot about energy and the potential for energy exploration in this country. It seems like shale is increasingly being seen as one of the most important developments in the United States.
Absolutely. But the story, just think about it again. I mean, about a year ago, certainly in the aftermath of the 2008-2009 crisis, we've seen U.S. GDP 1.5, 2%. This is not the story you're seeing in Europe, which has been negative. But the U.S. story is constructive. You've got the shale story. You've got the consumer coming back vis-a-vis exports. You have an interesting story around the housing rebound. I know Schiller's not that constructive or positive about it, but there's something going on here that actually feels like there's some momentum. And obviously, looking at the M&A story today, there's sort of 3 big transactions in the market. I think it's turning around.
So you feel that Europe is on the right track, though?
Well, I think there's a lot of scope for policy intervention, and I'm pretty optimistic that they're at the point now where they will throw more at it.
Do you see bumps along the road?
Absolutely.
What would that be?
Absolutely. Well, I think that the big ones are repayments, the repayment schedule, Spain, the election in Germany. I think we all know that, well, I certainly believe that Angela Merkel will be re-elected, but I think those are the sort of big things that I'm looking out to see how the markets will react.
Dambisa, let me switch gears for a moment to ask you your take on the banking sector. And I know that you're on the board of Barclays, so I'm not asking you to give away any secrets here, but there's a real movement across the world to split up some of these banks. How do you think this is going to go? Are you expecting a global standard when it comes to the financial services sector? What's your take on how the major banks change the course of business in the coming years?
Well, Maria, I'm sure you're aware that, obviously I have quite restricted about what I can say, but I think that the story in general since 2009 has been one of global standards. And I know Christine Lagarde has spoken about this, the G20 going back into Philadelphia, I think it was. There was a lot of discussion about having to come together and form global standards. Of course, it's challenging. So I do think there's a lot of conversations going on in the background that are aiming to have some convergence around these issues. But remember, these economies themselves are undergoing very difficult challenges. The European economy is very different from where the UK is right now, which we know is struggling with potential with a triple dip. The U.S. is in a very different place. So the implications of what regulatory reform can do in the banking space is something that's an open question, but still up for debate.
Dambisa, good to talk with you.
Thank you, Maria. Thank you very much for having me.
You bet.
Thank you.
Thanks for joining us.